موارد فاينانس فالك طيب.
Good afternoon. This is right after quite a long break. So we'll kind of just keep it short with the intros. I know there's a lot to discuss here. I mean, this is a subject very close to our hearts. And all of you are really representative of four pillars, I would say, of different parts of the same SME ecosystem that we want to so passionately serve and serve better. So today, I'm delighted to be moderating this conversation, and thank you, Mawarid, for hosting this panel and this very topical sort of subject, which is very close to our hearts. I'm going to keep the intro short. The introductions have already happened. You're all thought leaders from your respective fields, from payments, from networks, from credit and technology. And really we kind of dive deep into what is it that is preventing SMEs to really join the digital journey and become part of the digital economy. What are those challenges? And I working really deeply in this space, I've seen closely how collaboration between banks, networks, and platforms can really help drive inclusion at scale. And so I'm going to just start with maybe Samir. I'll bring you in. You've been a proponent of SME enablement, onboarding them onto digital journeys, and really that speaks to the foundation of financial inclusion itself. What is it that you're seeing that is preventing SMEs from moving from cash? They continue to transact out of outside the POS rails. What are the one or two challenges that you're seeing that's really holding them from becoming part of the digital journey? And what is it that in your view would take in terms of the one or two ecosystem level interventions that will make that transition smoother, faster, quicker, fairer, and more inclusive?
Absolutely. Thank you for the question. And I think the topic of SME continues to be the biggest opportunity here in the UAE and in other geographies as well. I think it's the most underserved in any economy, while they contribute the highest margin compared to any other business. So they pay more margins compared to large players. Now, if I look at the SME today, why they don't transform into digital, it's very simple. It's very inefficient for them to do it. If I'm a one-man shop, what do I want to do? I want to do things more efficiently and deliver more. I think the ability to translate that from a concept to real value that they get out of digitization is something that's missing. So education, continuous education, development is quite critical for this SME segment. Understanding their needs. I think the biggest myth companies did is they went for large-scale businesses and then they tried to give the same proposition to the SMEs and assume that it will work. No, they have specific needs. They have big requirement, and they pay a margin. They pay healthy margin in this market. It's very, very inefficient for them. How to demonstrate value to them is very critical, and invest in this domain is my advice. And if these two things are addressed, I think there is a lot to be done in that space.
Super, thank you for that great perspective. And I think you touched upon one or two very sort of relevant aspects of the real problem, and how do we kind of just as thought leaders converge in with solutions, and especially when you've moved SMEs from where they are in the transition to being fully kind of ensconced in that digital journey. It sort of speaks to the opportunity that it creates and how data can really become the next big opportunity. And for large payment networks like Mastercard, Thomas, you run SME enablement programs across the region, especially emerging markets. And really, what you're really trying to do is get to the underserved, get to the micro SMEs, and that really would take a lot. And I would imagine running those programs would involve working with different parts of the ecosystem, bringing in those partnerships. And I'd love to kind of just pick your brain on what does it take to really get the programs out there that can make the impact ground up. And on top of that, how do you really incentivize your partners when you take those programs out to be able to fully align so that when you drive inclusion, it's not only sustainable long-term basis, but also commercially viable for them?
Sure, makes sense. So look, when we think about SMEs, the way we think about it is most SME owners are one, they're time poor and they're cash poor, right? So maybe I'll go with the time poor one is the programs that we come up with is how do we make it easier for them to accept payments, reconcile those payments so that they're not, spending a lot of time managing all of those areas. But also that's for accepting payments, but also on the making payments, it's more around, you don't want the SME owner to be managing all the expenses of his company, right? So how can he delegate spend, right, in a right way, and what are the technologies that we can bring in to actually delegate that spend, et cetera, right? So that's on the time poor aspect. On the cash poor aspect, and I think this is the one subject that everybody talks about, SMEs are, starved of capital, right? They need credit. And unfortunately, the reality is, SMEs are seen as risky, right? That is the main challenge in this market as well. We've gone through multiple cycles, and when something goes wrong, people lose money in this segment. And it's how do we tackle that challenge is I think what we are trying to think through. And we're looking at it in three ways, right? So how do we de-risk this segment the right way? One is exactly what you said, the data, right? How do we leverage the data? And one, you've got data on the SME itself, which is if once they've given you consent, we have data on what are they accepting, what are their sales volumes on a daily, weekly, monthly perspective, and how do we use that data to actually lend to them, right? How do we leverage that? But on top of that, we're working with multiple partners to bring in all sorts of other sort of data elements into the mix as well, right? And using AI and modeling, which I think some of our partners will talk about it, in figuring out how do we leverage that data to actually make better decisions, right? So additional data. So you need a lot more data. If you just look at the bank statements and the financial statements that the SME is going to give you, it's going to be quite tricky because most SMEs don't have the best setup in terms of financial statements that they worked on, right? So the one aspect is data. The second aspect I would say is product itself, and we're working on multiple product. And how do we help de-risk it from a product perspective? The good thing is if you put the money on a card, you can restrict where they can use that money. So you could say, look, I'm giving you money just for you to buy supplies from this particular supplier or one of your vendors, and that card can only be used there, right? So you can actually de-risk it that way as well. So that way you haven't given money to an SME and he hasn't just bought a Ferrari or a Rolls Royce, right? Or a nice Rolex watch. He's actually using it for his business expense. The third one actually is exactly what you talked about. To crack this space, and look, I mean, we all think that this is done well in the US and it's working very efficiently in Europe as well, but it's not, right? Even there, it's not actually working extremely efficiently. To crack this space, you're going to have to bring multiple partners together, and I think it's forums like this, and a big shout out to Mawarid and our partners here. You need multiple players to come together in terms of one, the data, automating the journey, automating and using AI in terms of the modeling, just to kind of de-risk this and do this the right way, right? So that's what I would say is, partnership becomes very important, and it's going to be multiple partners coming together to actually make this happen as well.
Fabulous. And, that really speaks to the spirit of collaboration that is needed to make things happen. It's a very noble cause, SMEs, and, this has kind of been a recurrent theme since the morning here, are really the lifeblood of our economies. UAE alone has, over 1 million odd, but almost 500,000 odd are underserved to a large extent. And, while they drive more than, 60% of the non-oil GDP and drive more than 80-85% of private sector jobs and all the innovation, it's really important at this time that thought leaders like the kind we have on the panel come through together in that collaborative spirit to make financial inclusion possible. And on that note, I'm going to bring Dr. Allan. Can I call you Allan? Just sort of to keep that a little informal. And you've had an amazing track record of really studying through some of these aspects of enablement. And for you, I think what you've really done so well is crack the code from educating and then bringing SMEs from where they are on their payroll, so just not only from digitizing their payroll to moving towards working capital enablement. And so just take us through that sort of sequencing, just for the benefit of all of us. How did that sequencing work for you? And along the way, what are the one or two, sort of from a governance standpoint, guardrails that you thought were necessary in that sequencing, so that they can just sort of, from where they are to where they are getting to in terms of enablement, sort of sets them up well for what the future holds, which is convergence of payments and credit and AI. So more and more of those SMEs can come mainstream.
Right. First of all, our thinking logic came because our founding team of the company, we have more than 25 years combined living in the GCC, right? We are all expats. So the first thing that came to my mind is when we're understanding the GCC is that you have a big segment of the private sector is relying on the economy of the private sector in the SMEs. And worldwide, 70% of the SMEs are contributing to the GDP of the economies, right? However, when you understand the demographics, how the financial services operate, there is a big portion of middle class and of course lower classes that do not have access to financial services. That was the first thought. The second thought was, why, if you are making above 15,000, 20,000 dirhams a month, you still cannot get approved quickly a car loan, a credit card, and all of that. So there's reasons for that, how the banking sector operates in the region. Is because first this has to do with risk. A big expat population, higher risk of defaulting or leaving the country, right? But the reality is that the driver and who is building the economies in GCC are mainly expat workers or employees, right? So that's the core, and that's the people you need to protect, make them happy, let them build, invest, save money, so that they can actually stay longer and build wealth and disseminate what they have to bring to the GCC. That was the second thought. But coming to your question was, okay, understanding deeply which are the requirements for an expat or even locals to open a lending, acquiring a loan or something, is that the bank normally needs to approve and has a list of approved companies or SMEs that their employees can get or not a financial credit. So we said, let's make a bridge and make it go through us. We will borrow money to these people, right? And the biggest fast-growing companies in the world, that if you compare them to companies like Chime, Wise, Revolut, Klarna started as a BNPL, Chime started as an earned wage access solution in the US. So we said, why is this happening? And the number one reason is the risk. If you rely only on the credit bureau information of the government, is sometimes it's out of date, or it's too expensive to also make the consultation to just borrow small ticket sizes, because it has a cost to do that. So what we do is, let's build our own credit scoring, and the data and the way that we are helping SMEs is that we build alternative credit scoring based on the employment data. So we are able to know how much money you make, how long you have worked in the company, if you have family, etc. So that we can, our core product that we are actually launching in Dubai with Mawarid in the first quarter next year is the earned wage access solution. But for us, that's a way also to help the companies, because in terms of what's happening on the ground is that since a lot of employees cannot just walk into a bank and get a credit, the companies, some of them are financing themselves, salary advances, end of service loans, but it depends 100% on the cash flow of the company. So we are removing that burden so the company can invest in other things, growth, scalability, research and development, and we give the salary advance ourselves. And in the long run, we are adding other financial services like investing, savings, and long-term installment plans and so on. So that's more or less how we are. That's big.
Super. That's a super useful insight, and it's kudos to the kind of work that's going on, and good luck with the EWA launch. The market needs more and more of early wage access sort of products. It needs more contextualized credit. I mean, that's really the ultimate sort of destination where if payments are becoming fairly instant and now intelligent, can credit become contextualized? And that's really what will drive inclusive growth. And I think, Hari, you've kind of led from the front of the battle lines as far as that movement is concerned. Your platform takes billions of dollars of volumes, and I think what you've done on the AI space, bringing intelligence into your own credit operating system, is something I'd love for you to talk about, especially in the light of the fact that AI, which is now looking like in the coming years will be a driver, but how can AI also be a guardian? And I think just within that whole governance mix of where AI in a white box and how those decisions can be really explainable and auditable from a compliance and regulatory standpoint, I think if you could just sort of bring one or two of these in your comments.
Thank you. I think let me just take it in context to what's being said before. The fundamental question, particularly when it comes to SME lending, is the cost of lending. You may have, Dr. Allan mentioned it, Soliman referred to it as well. So the question really is that how can you drive down that cost of lending? For a lender to make money, he has to increase the spread. If the source of funds, cost of funds is lower, the spread can be larger, but the SME is no longer buy at that price. So you need to drive that down. Smaller spreads, still profitable for the lender, feasible for the SME. That's the combination that will work. Now, where does technology come in? And when Thomas talked about US and UK and Europe, but if you look at India as a great example, today there are many, many millions who make, say, 500 dirhams a day equivalent, 10,000 rupees, right? But the lender knows at the end of the day that the total earning is 10,000 rupees. In a small shop, which is 500 dirhams. So, see, 5,000 dirhams, whatever the number is. There is a direct connection from that POS, for example, or from the mobile, if it's just mobile payments. All the payments are mobile. Like you said, 89-90% of the payments are on mobile. SMEs are on mobile. Individual hawkers, street vendors are on mobile. So it changes the whole thing. So I'll come to that in a minute. So that provides the lender the possibility to put that money at the end of that day, depending upon the transaction of the previous day, literally. A truck starts a journey from city 1 to city 2. The total cost of that is, let's say, 10,000 dirhams in dirham terms. But he requires maybe 3,000 dirhams to start the journey. Just the 3,000 dirham goes into his wallet, into him that morning, just after he uploads the truck data. That kind of instant lending, when the cost comes down to the actual time for which the money is usable by the borrower. Now, where does technology come in? Technology makes it possible because the cost of technology today has become in bips, in a less than 1 basis point. If you look at that in terms of, any lender would make 150 to 400-500 basis points. But when you do that, when you cost of doing the transaction and making the transaction happen drops to very, very infinitesimal numbers, which is what we make happen for our lenders. So that's what makes the difference. Our cost to our customer makes it possible for them to carry out their complete transaction, whether it's whichever lending, as sub 1 bip per month. So, that's what we're talking about. That makes a lot of difference. Where does AI come in? What's the raw material for AI? You need valid data. When every part of the value chain is digitized, and the digital process obviously puts in some guardrails on the entire validity of the data, veracity of the data. So you have quality data which is digitized, because it has to be quality when it's digitized by the very nature of how systems are built. You have the raw material for AI. What AI can do is the learning gets accelerated, because now any lender, you using digital data across the entire chain, right from origination all the way up to NPA management, and that's what we build, that entire chain, right? So if the origination happens digitally through, and this kind of a summit where there are multiple fintechs, each fintech focusing on one specific area and addressing that customer base to pull the data in through that app, is a phenomenal ecosystem that Mawarid is out to really create here. And this ecosystem, when you put it to the base plumbing, if I can call it, between that fintech ecosystem and the lender, which is where we can come in, if I can plug that, and so the completely validated, lendable to data, lendable to customer is available to the lender, and once money is there, it just goes through. So the larger picture with AI driven, you mentioned about how AI is moving to being from an enabler to a AI driven situation. When that happens, the simple equation, if I can put it over there, will be capital plus technology is equal to lender, right? Now, does it eliminate people? No. The question really is, as somebody said earlier, AI needs what is it that you're feeding into the ecosystem? Right? As long as what is being fed in is properly curated, and the guardrails have to be put in to ensure that there's no contamination, so to say, and this famous hallucination that comes along with any discussion on AI, that gets practically eliminated. It has to be, you cannot permit that. And when a larger amount of if a larger percentage of the entire transaction can be completed without the intervention. Today, number of our customers do 85-90% of their transactions completely automated, no manual intervention at all. Because the rules are set, it's met, it goes through. And with AI, it will the smartness with which you can improve your business rules for your origination, for example, will go up to another level. The regulatory compliance, which is Soliman is talking, is a big worry for everybody here. Once you have an AI-driven regulation where the regulated data is always available in the ecosystem, and that gets pulled in, and the AI-driven regulatory interface can enable real-time regulation, in the sense that transaction that is potentially will be violative or non-compliant can be arrested at that point in time. This is beginning to happen. So yes, I think every step of the process, improving the origination through much larger, more minute and pointed business rules, which will enable lending to even the small ticket borrower and the smallest of the SMEs, the micro SMEs, if you like, even individuals on one side, to if you go up the chain in terms of how the entire management takes place into the payment, the potentially being able to identify a default that's coming just before it can occur. That's another very, very specific area where AI can make a lot of difference. Once the default data is all put in there, it's coming in directly. And finally, in terms of the regulatory, I've already spoken about risk management, and can be a tremendous amount of possibilities there in risk management, because the norms are there, but the practices need to be digitized. So every individual organization, if it has a internal mechanism for it to have a digital platform where the data is captured, have a repository where any kind of information, there are lenders today that digitize everything they do. It's beginning to happen. You're having a meeting with your colleague in a closed room in your organization. Why do you just talk like this? Just open up any Zoom or Teams or whatever you use, and the entire content gets captured there. That gets transferred onto a repository, and that becomes the storehouse of the learning that this particular conversation provides, which is what AI needs to feed into. It's as simple as that. So if you digitize everything what you do, every step of the way, whether it's verbal communication, whether it's a video communication that's being sent out to customers. And if you look from marketing to all the way through to prospecting to getting them on board to servicing them, every transaction happens digitally in the organization. That is the raw material that AI will feed into. And the rest of the platforms is pretty simple. Today is all available. You don't need to do anything. The LLMs are available. You pick the right one, put it there, but put it within the guardrails, feed the data, the rest happens. That's the magic that AI provides.
Fabulous. And I think all of you have really touched on different pieces of the same puzzle. There's obviously magic waiting to happen at the convergence of payments, credit, and AI. And I think we all want to solve pretty much the same problem. But there are recurring themes even here, from frictionless onboarding to inclusion that's data-driven to AI that's responsible. And in the leadership positions that all of you are in, I think this is a real opportunity to drive financial inclusion at scale at the intersection of capital, commerce, and technology. So I'm going to just try and join the dots amongst all of us, just sort of to bring through the one theme that we are here to talk about, which is how does innovation and values-driven finance really come through together? And in that handshake, how can we drive financial inclusion? Because there are challenges still. Samir, I'll come to you. There are challenges. I mean, right? SMEs, they miss the holiday season because a coffee store owner can't hire 2 baristas because when she goes to a bank, there's friction. There's paperwork heaviness around everything that is sought. They want audited statements, but her store is very data rich, very asset light. And how do you then help convert that data into instant credit? So, and while you're doing that as a visionary fintech leader that you are, how do you bring, for example, just between acquirers and banks and lenders, how do you create that sort of common ground of alignment even along incentives? How do you drive that forward?
Absolutely. You touched on a very, very important point for SMEs. Funding, access to funding is a big problem. And as Thomas said, we have the data. We know how many transactions he did over the past 3 years, over the past 3 days, over the past 3 minutes.
Yeah.
And we know that he's been in business for how long as well, right? The only thing is that I have the platform, I have the data of that, but I am not the funding party. And I have to have bilaterals with companies like Mawarid today. But I don't have a platform that I can share with my merchants or with my SMEs to ask all the funders to bid for the best rate for this person. And this is where we should be going. And I think we sitting here, before our discussion here, we were figuring it out together, but I think this is something that will happen. And I'll be happily working with partners who will do that. The second thing, which I don't want to miss, the SME have employees, 1, 2 employees, right? These employees need salaries. So another area, similar to the SME segment, is the WPS segment. It's another segment that's underserved in this market. Regardless, it's carded, not carded, it's totally underserved today. If we have a proposition that can create service to these segments that can actually get served and get more value out of it, I think this is where we break it. And I think talking to Mastercard before this session and talking to everyone on this panel before the session, I think we could be up to something really great that can add value and can come to market really as early as Q1 next year here. So I want to leave you with that hope as well.
Super. I'm going to come to Thomas Yu, because you very eloquently spoke about how there is a real possibility of using the information highway that you're sitting on, data from there, and putting different pieces of the ecosystem together from the vantage point that you have as Mastercard. How would you, in the context of, say, data privacy, kind of connect what you have, which is a gold mine of data, which is the gold dust everybody needs. Data is the new fuel. And financing, for example, when you kind of bring the two together, what are the sort of constraints you face? What are the guardrails you put around compliance and data privacy?
Sure, that makes sense. So absolutely, right? So from our perspective, we want to be very careful how that data is being used and who's using it, etc. So consent becomes extremely important, right? So if that small business is asking for it, they need to consent that this data can be used. That's specifically to them. But I think a little bit more and broader than that, what we're trying to see is how do we leverage data a little bit broader, right? That might not be very specific to that one merchant. For example, you know, there's a cafe or a coffee shop that's coming in and wants to, you know, their coffee sort of, their barista machine is broken down and he needs to kind of get more, he needs to buy another one. Yeah. How do you decide to give him? Yes, you could look at that, you know, the data about him specifically, or the other data that we have is we know how coffee shops within a 5-kilometer radius or a 2-kilometer radius, how they do, how well they perform, right? And that's additional data that you can add to it. Similar to this, there are multiple other data elements that you can add in, and that could be very powerful as well. So you're not just looking at them specifically, but you're saying, okay, this particular sector in this area, how are the others doing as well? And that, again, you're going to have to use AI and see, does it add a lot of value in that decision on whether you want to lend or not, right? Is this something that really increases the confidence of that particular sector, and can that add value? So we're looking into those aspects as well. So some of those could be not leveraging data that's specific to them and making sure privacy is kind of maintained. It's just saying, look, that's coffee shops in this one particular area, but it actually helps, right? And helps them to kind of make a more confident decision about that sector. Now, we're actually working with a couple of other partners, leveraging our data, but actually there is a lot of data out there, and this I think is the beauty of AI. There's a lot of data that the governments are putting out, similar to this, you know, economic stats about different sectors. It's how do you bring all of that together and figure out which of these data elements can actually help you make a better decision score, right? So, and how do you bring in and say, look, I want to give out loans at an NPL of 2%. Currently, my acceptance rate is 20%, right? Of all the people that's applied, only 20% I can give out because that's, you know, only they hit that. How do we put in a lot more data so that we can increase our score and the ability to actually risk score them better, so that maybe I can get to keeping at the same 2% NPL ratio, but how do I get to a 50 to 60% acceptance rate? That's leveraging more data because I know about that business a little bit more, right? So it's how do we leverage data a lot more? And it's one, using the broader Mastercard data, but also a lot of the data that's out there that you can actually get from the ecosystem. And we're actually working with partners who are actually already curating all of that data and helping to build better scores using the data as well.
Sure. No, that's an excellent segue for me to kind of building up from where Thomas leaves it as, you know, data, the availability of data, and data as the fuel for credit-led growth. And when AI takes over more and more of that decisioning, when more and more of that decisioning becomes automated, and speed and precision picks up to a point where if payments are happening in a few clicks, credit will also happen in a few clicks. So if the future of credit is really instant, what, Allan, according to you, should the guardrails be, given that AI will take on more and more of the decisioning, make it more and more automated? What should we, as different players in the same ecosystem, be careful about from a regulatory standpoint, from a compliance standpoint, just from the standpoint of, you know, just sort of making sure that, you know, when AI is fully unleashed, there are also guardrails along the way?
Right. So actually, I love data because before being a fintech founder, actually, I'm a scientist. That's why I have a doctor title. I have done so many academic journal articles before. And one of the things that I love of what we do, and that it's connected to your question, is that the better quality of your data, the less risk it is to lend money. Because the more accurate you are and safe that the people you lend money will repay you. But the difficult part is that the data needs, how do you trust the data? That's the most difficult thing. And normally, traditionally, Each country has its own credit bureau. You can access the data if you're a financial institution, but it has a cost. Now, the new wave and what is being regulated in the UAE about open banking for sure is going to be a game changer of how we use, process, and connect data. Now, the important fact that we need all to take care if you are trying to be lending financial services is that you should not rely on one single source of data. You should have multiple touch points of data, and also it's a process of validation of what are you doing, right? You cannot just build a new score or take one of these two scores and start lending money expecting that everyone will repay you because the data said that. You also need to do experiments, to do experimentation, like a scientific method. And that's how we build what we do actually, because we don't know, we have a lot of assumptions, but until you don't test and you don't see how data behaves, it's not proven. It's experimentation, testing, and building your multiple data points that will work for you, because what works for me maybe does not work for Harry or for Thomas or for other people, right? Because the service is different. The amount of lending, the loan book, of the risk that you're willing to take, it's also different. So I think that those are the key points. The understanding, it's all about better understanding of the behavior, the sources of data, and how you can control risk in a better way, building it. Now, when you talk about big lending businesses, data becomes big data. So it's also not humanly possible to have on-time automated decision-making by humans. And that's when you start adding AI. So AI can make more efficient the decision-making, but you need to train the AI. You cannot just rely and tell AI build me an AI credit scoring.
Right.
Because you need to see first and understand it first, and then ask the AI to do it automatically.
Very interesting, very interesting. And Hari, to just bring you in to finish up on what Allan so interestingly sort of just and very eloquently put through. But then if you look at AI and the dominance of AI that we are seeing, even in decision making, what do you think is one element of that decision making that still must remain human?
Right. I think that's a very, very difficult question to answer because that answer is changing as I'm speaking.
Sure.
Right? So what the answer 6 months ago, 3 months ago, 1 week ago is not valid in its completeness. So I can say in terms of what we're talking about. So effectively, the first aspect, like Allan also mentioned, is digitizing every bit of the data where the validation happens. So first is creating the valid platform. We're not just talking about the data somebody enters onto a mobile or a computer. We're talking about voice, we're talking about video, we're talking about any kind of interaction that you're having in the course of business, whether it's with a customer, whether it's within your organization. When you digitize it, there is sufficient amount of intelligence, quote unquote, that can sieve out and what is not needed and sieve in what is needed. There's sufficient amount of material there. Once it comes out, so it all gets stored onto this, and there are some basics there. You will have a digital system, whether you're working depending upon your business. So you have a lending platform. The lending platform will validate the data that's coming in. The norms that you have set there will take out everything that needs to be taken out. So that's what I'm talking about when I talk about this. Even in conversations, one can do filters which will make this happen. So all that good technology is there. Now, when you're able to create that better, the complete learning of the organization is captured in this storehouse, if I can put it very simply. And then when your AI, in the sense that every organization, the way I see it going forward, every organization will have its own AI infrastructure within itself, where I will have, in my organization, I will have I don't want to complicate technically, but a database that can capture all kinds of data that's happening in the conversation. There is a learning engine that's attached to it, which will learn with every transaction that's happening. and that just simply feeds into a generic LLM, any of ChatGPT, Claude, there are hundreds, so many of them, any of those which will translate. So whereas what we see within the enterprise is the natural language that you speak. You speak in Arabic, you speak in English, you speak in whichever language you speak. The understanding of that and converting it into data digitally that what is below can understand, and similarly translating the response that's coming from there into a language that you can understand. Including all the nuances needed to understand the specific line of business that you are in. So the lending data information, sufficient information is there. If you say basis points, it knows what you're talking about. So so you can speak in simple English or simple Arabic, simple whichever language, and that translation of that is where this comes in. And speech, I'm not talking about digital, speech conversion has become pretty much 90%, 99%, whatever percentage, depending on the specific language. So that is making this happen. And so ultimately, if I look at what I call technology utopia, each entity is a AI representation in an ecosystem, right? And the ecosystem, the regulatory, are also AI representations in the sense that the net of what is the content that needs to emanate from there to interact and complete a transaction is available in one single store, if I can put it that way. And that store is what represents you. Where do people come in? People need to ensure that what is going in the store makes sense. Otherwise, what you will get will be, rubbish. Like the old, garbage in, garbage out is the oldest concept in computing. The same concept holds even in AI. So it's like teaching a child. Why does the mother take so much care not to expose the child to so many things that's happening in the world? Because she doesn't want that garbage to go into into the child's head. It's the same thing. AI learns in a very similar way overall. But what is happening in this journey is that just being, a while ago it was data, and now it is getting into a space of emotion, right? Can you really bring about the emotional element of a person's interaction with another person through that technology? That is beginning to happen. It's not mass scale yet, but definitely we are seeing that in the space. So, and believe me, the first AI seminar I sat in was somewhere in 1988. 1988 is the first time I sat in a seminar. I heard about AI, I got so excited. More of machine learning, which is a more logical, and less of AI was talked about that time. Got so excited, found out the cost of doing that is completely exorbitant because the cost of compute is somewhere else. Today, that's available on your mobile phone because somebody else is paying for it. The investors who put money into OpenAI and other things. So it comes to you at a very, very low price, free in the first and then freemium. So that's what's shifting the whole thing. The cost of technology is driving everything down. The cost of technology has been driven down, and therefore this usage and everything else becoming omnipresent across everybody's palm. And that's making a big difference. But you're right. The people, in terms of their presence, their thought process to put the guardrails is fundamental, to ensure that what's going in is valid and the veracity of the data, ensuring that's important. But yes, even there, AI is beginning to play a part. So I'll leave it there. It's an ongoing conversation.
Yeah, absolutely. It is ongoing. There's so much to unpack, double-click, such great insights from all of you. But unfortunately, we've run out of time. And I must thank Mawarid for hosting this panel and such a great conversation. And for me, a privilege to really interact with all of you and the sharp and the actionable insights that each one of you, Samir, Thomas, Allan and Hari, so much to take away. And then hopefully we'll get to continue our conversation after this panel. But one thing is clear and quite clear, that to close the SME gap, it will take a lot of collaboration, a lot of courage, and a lot of clarity of values. On that note, thank you all. Really appreciate your time. Thanks.